Good morning and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin and I'm here with my father, Carl Swenlin, and we're going to look at the charts that we think you need to see. And we're also going to be taking your symbol requests. We'll be doing a sector review, a little bit of a look into some of the industry groups. For your homework, of course, we do want to let you know that the Q&A box is for you to put in your symbol requests and questions. The chat room is also for you, and it is moderated right now by our friend Fred. And you can use that as a way to talk amongst yourselves. But just make sure when you talk in the chat room that you use the drop-down menu above the comments so that you send it to everyone, not just to the panelists, because we don't look at the chat box. We follow the Q&A. All right, with that, let's go ahead and get started, Dad.
Okay, and then just to also make sure, if you're having problems with the quality of the video, try another browser. All right, so we have a new war in the Middle East, and there's a great deal of talk about how much is affecting the market. You have to remember the market is made up of the sociopathic side of our personalities, and it asks the question, how does this affect me? And truly, I don't think it's seeing much effect, as it's going to be much effect on our markets at this point. What we had a really great Friday, and what we have right now is just a pullback to a rising, falling trend line that it broke on Friday. So Friday's rally was not necessarily blow off proportions. So right now, I think we're looking at a healthy pullback, and we'll probably continue on in the week. Let me get something out of the way here. Okay, looking at the dollar. Here again, it was in a pullback last week, and it's maybe found a bottom, but certainly no effect there. Gold, there has been possibly some effect, but again, we were having a bottom. Gold was bottoming on Friday, and this is a continuation, probably a more exaggerated up move than it would be if it weren't for the war. And oil as well. War in the Middle East. That's a problem for oil, and could cause shortages, therefore higher prices. But the last couple weeks, oil's been in a pretty severe downtrend, and it's nice to see a bottom there. Treasuries sort of flattening in the short term. But let's look at a one-year chart. Not any support visible there. Let me get, okay, again, this is a weekly, and it's broken through what would be long-term support. Okay, here's the next support is about 80. The 10-year bond yield, getting parabolic last week, and when it goes parabolic, it's begging for a correction. So I wouldn't be surprised to see it pull back somewhere, maybe a 50% from this, in this area here. So probably back to 45-ish. The dynamic yield curve on stock charts is beginning to flatten. But here's the deal. Short-term rates, short durations, I should say, are flattening out. Longer duration are still rising pretty strongly. So that means not that you're going to be, if it flattens and even goes back to not being inverted, it's because longer term rates got higher, not because shorter term got lower. At least it's the way it's looking right now. Natural gas, one of our favorites, is in a trading range, moving to the top of that range right now, and had a good week last week, though. Okay, look at it, the Magnificent Seven stocks plus Tesla. Apple is rallying slightly. And as I'm looking, NASDAQ is down about 0.5% right now. And that probably has to do with this group of stocks right now. The market is otherwise not too bad. Dow's down 20 points. So here's Google, slightly higher. Meta, slightly higher. Microsoft, slightly higher. Mm-hmm. Netflix, slightly higher. Boy. NVIDIA, down 2.5. So that may be where we're getting the weight on the NASDAQ. Tesla down also 2.5. All right. I had some comments back to gold. Gold is, I just wanted to comment on the advertisements we see for gold. They're just outrageously distorted. And one of the comments they make, one of the talk about is that gold is anonymous. Okay, it's anonymous if you buy it for cash from somebody on the street. But when you buy it from companies that have to keep records on their sales, you can believe the government wants to know you who bought gold. They're going to go to those companies and say, give us those sales. So it's just one of those things that if it's not perfectly anonymous and the government confiscates gold again, just keep in mind whether you would want to go against the law should that happen. All right, we had we had a question last week about the MACD. Do we use the MACD? And no, we don't. You'll notice I've got a chart here showing the MACD, our PMO, and also the PPO, which is a stock charts indicator. Notice that they look pretty similar. And how can this be? Well, you take the same basic raw data set and you can put all kinds of calculations on it, but chances are you're going to come out with curves that look pretty similar. But one of the things, we're looking at a 1-year chart here. If we go out to 10 years, we're going to see something greatly different. Let's update. Now notice here's the PMO now, and here's the MACD. Notice that it gets very narrow the further back we get, because the PMO and PPO to some extent are ratio calculations, where the MACD is I'll call it arithmetic. And the lower the price that you're dealing with, like back here, market was much lower than it is here. That affects the trading range of the MACD. Whereas with the PMO, we can compare this reading here in 2022, that top, and this top there. That shows us that the relative strength at those 2 points was almost exactly alike. You can't do that with a MACD because it widens the higher price gets. the PPO doesn't seem to be quite as broadly ranged as the PMO. So anyway, that's why, not only because it was invented here, but that's why we use the the PMO above these other two indicators. Okay. And I wanted to look at moving averages. Okay. We're talking the exponential moving average versus the simple moving average. Simple moving average just adds up the last, in this case, 20 days for the 20-day EMA. It's simple moving average. And when you recalculate for the new day, you drop off the oldest day and add the latest day and then average that. The exponential average is calculated differently. It's strict. It's not going to be affected by anything dropping off, the older thing dropping off. Whereas with a simple moving average, that oldest item still has an equal weight on how that moving average turns out. With the exponential average, you take yesterday's value of the 20 EMA, we'll say, and you shave off 1/20th of it, and then you add 1/20th of today's close. And that's how that average works. Now, what this does is it causes the most recent action to affect the moving average. Whereas, as I said, simple moving average, the oldest and the newest have an equal weight. Whereas with the exponential average, what happens today is weighted most. Now you notice here we have the top on the exponential average, which we want to know. We want it to be moving in response to where price is going. It takes looks like a couple of days more before the simple moving average tops, and you can see that's pretty consistent throughout here. Now let's go to the 50, and again, we see the 50 simple moving average tops behind the 50 exponential. And here we have an extremely large gap. Let's see, what is that? We're looking at a couple of weeks before the simple moving average tops, because it's not being affected as much by this huge down move. Moving to the 200, same thing. Notice how long it takes. The exponential tops right in here, tops again here, but it takes first top for the simple is right here, and that's quite a distance between the two. A moving average is just simply to initially, at least, to summarize price movement, and it gives you a much clearer idea of which direction price is moving, and it sorts out all the ups and downs of price. Now, so we finally get to how we use the moving averages. This is the SPY, and we've got, it's the 3-year chart. Now, you'll notice here we have a silver cross on with the 20 crossing up through the 50 EMA, and that's we call that a silver cross buy signal. And notice that it stays above the 50 for much of this up move, which is great. Now we get a false sell signal. We have a pullback, and we get we don't call this when this is a neutral signal because it's above the 200 EMA, and we don't want to get too bearish on just when that happens. But notice it didn't last very long. That was a counter trend rally, counter trend pullback, and it was soon reversed. Now, when we got to this all-time high here, on price, then we get a downside neutral signal, call that a dark cross, and that gives us a clue there's something going on. We call these not action signals, but information flags. And we got to look at the chart, decide what we might want to do about it. So here we have a pretty good pullback. It broke the rising trend line. We got the dark crossover, and it finally it bounces and it turns up. Here we get another whipsaw. It crosses over the 20, crosses the 50, just around the time we get a price top. And that's the kind of stuff that chews you up if you were going to do mechanical actions on these signals. So now we get another dark cross neutral signal, price is dropping. And at this point, we should be looking for that we should be suspecting that we're in a downtrend. And at this point, when the price exceeds this bottom to the downside, then we know that's officially a downtrend. But we've already gotten some clues along here. And again, the counter trend rallies tend to not last very long, and this one we got a signal ahead of the top here about a week or so, or maybe a month or so. But again, it turned down, and we finally hit the low of the bear market, and we start getting a rising trend, which works, as I've said. I've gone too far in the weeds, I think, with this, but get the idea. One other item I wanted to cover was a new ETF that we added to our ETF tracker list. It's the Bloomberg 1 to 3 month T-bill ETF. And that shows a very nice steady rise. That is because it's paying dividends and becoming more valuable every day. Right now, we've got a 4.36% yield, and that's pretty good. But you would get a better yield if you were buying the bills, because it's probably half to a full percentage point higher than what this is yielding. But this is a pretty good way to flip back and forth if you were trying to use this as a short-term cash holding. Just not a recommendation, just an information flag that this is out there. Okay, let me see. Did I forget anything? I think
you covered all of it. On the major markets, though, I don't know that we looked at gold miners, which are looking very interesting right now.
Okay, let me get that chart up.
Yeah, with gold rallying, gold miners are starting to look bullish. There's still needs some help under the hood, but certainly looking good.
Well, we're due for something in gold. I think gold is really overdone to the downside. So, yes, we have a very nice rally. We'll consider this the support level at this point, and up over 1.5. I should say 1.5%. And yeah, a lot of work to do under the hood, but it's oversold technically and due for an upswing.
All right.
Let me see if we've got any questions.
Oh, I should have been doing that.
Please increase the size of your pointer. I think I've done that.
Yeah, I think your pointer today is a little small. I don't know.
Not sure how to do it at this point. I'll play with it when you take it. But let's see. Okay, I don't see anything but
Yeah, I think we're good. Does look like we have room for more symbol requests though, so feel free to put some of those in there. I don't know that I'll get to all of them, but we only have like 3 in there right now. So come on in and throw some of those symbols.
Okay, I'll let you take it.
All right. Let's see here. Let me get my screen all set up here. Where did my share button go? There it is. All right, so we should see all of the sectors all on one screen. As I said, feel free to use the Q&A box to ask us questions along the way and also give us your symbol requests. All right, so I was looking at this. Let me update it and make sure I've got all of the most recent data. And there were 3 sectors really that came, well, I should say 4 that I found interesting for the day. We kind of already talked about energy having this really big upside reversal, likely on the heels of the war in the Middle East. That's going to be causing some issues in the energy sector. And it's already very oversold from the big sell-off that we just saw in oil. So it's really primed to move much higher. So if you have been in inverses like I have for energy, probably not the time to stick around in that. The other 2 that I found interesting were comm services, which are getting ready to actually are showing a new PMO buy signal today. Double bottom, nice little breakout there for comm services. Technology is the other place. There is a new PMO buy signal on technology as well. A little bit of a double bottom on technology and a nice move to the upside. Although I have to say, when I compare the 2 sectors, I noticed the price is not above the 20 and 50 like it is on comm services. So price is a little bit stronger right here for comm services today. The other sector of interest to me was healthcare, which is starting to rally and give us a nice little PMO turn. The only problem I have with healthcare right now is it's in a declining trend, and that declining trend has yet to be broken. So I'm not going to spend much time there, but I would have to say that healthcare probably should be on your radar right now. It is a defensive area of the market, and if things get a little touchy here with the war, that might be an area where we could exploit that area. But what I want to concentrate on, I think, will be technology and comm services. We looked at the Magnificent Seven, which comprise, are in both of these sectors primarily. And they're looking pretty bullish, to be perfectly honest. Most of them are up a little bit. Falling wedges, a couple of good signs. So I think these are the 2 areas we need to concentrate on, but just be aware that they are also very vulnerable. These are the most aggressive growth sectors, comm services and technology. And if the market is going to turn, then that's going to be a bad place to be. But right now, with the market looking like it's going to rally for a couple of days here, maybe into this week, these 2 areas are going to be good to be in. So let's go ahead and move on under the hood here. All right, so here is comm services. Let me get it to where I can see it. There we go. All right, so double bottom, nice breakout like we saw in the candle glance. Here's that new PMO buy signal. RSI is positive. And look what's going on under the hood. I was looking Friday to see where there was strength, and technology and comm services were definitely where I was seeing it. And you can see a nice expansion in participation here for comm services. Stochastics are also rising. And notice the outperformance here really for XLC. That has been, it's been quietly outperforming for quite some time. So comm service is still looking very positive. And here is technology under the hood. Again, little double bottom, nice little rally coming here. Does look like they are technology is above its 50-day EMA right now, so that's a good sign. We notice that there is that PMO crossover buy signal. And here you can see, I talked about technology last Friday for my subscribers, and you can see that we're getting the expansion in participation that we want. We've got stochastics moving above 80. The big problem I see for technology right now is we do have a reverse divergence on the on-balance volume. So what I'm talking about here is, so on-balance volume is making a new high, but price is not. And price should follow volume. So that's a little bit of a concern that we're not seeing price moving up as it should, given all of the volume that's started to come in. So something to keep in mind. But I'd say that those two areas, technology and comm services, definitely look the healthiest. Let's move over to our industry summary. Here's energy. We can just take a quick peek, but you can see all of these industry groups are seeing a really nice bounce. And again, likely due to what's going on in the Middle East right now. Coal's also seeing a nice move to the upside. All right, comm services, though, let's get back there. So I noticed media agencies breaking out on Friday, looking very strong. PMO buy signal, stochastics rising, so there's a good area. Broadcasting and entertainment is starting to show some rally, but notice it's still in a declining trend, so maybe not quite the best place to be in comm services. Fixed line telecommunications in a declining trend. PMO cell signal, not a good place in comm services. Internet looking pretty good here. That is Google's area, and it's likely pushing this particular group much higher. Stochastics above 80, and look at that new PMO buy signal. So internet looking pretty good here. Publishing, kind of not doing a whole lot. PMO is starting to turn up, but not the best area in comm services. And mobile telecom still looking very bearish. So if you're in comm services, internet's looking pretty good. Media agencies, I like the look of that. And not fixed line. Broadcasting and entertainment looking okay. But I would say if you're going to be in comm services, start concentrating on internet and media agencies. Let's go to technology and do a similar look. So we'll start here with renewable energy at the bottom. You can see I was already clicking through these before we started this morning. But renewable energy, certainly not the area to be in technology, continuing to lose ground. PMO is continuing to fall, and it is oversold, but it hasn't made one bit of difference. Certainly not a good area to be in technology. Stay away from renewable energy. Electronic equipment is also in a declining trend. We're not really seeing what we want there. Computer hardware, this is your Apples of the world. And Apple is doing fairly well today. So you can see that we do have a rally going on in computer hardware with a new PMO buy signal. So that's looking pretty good. Telecom equipment looking pretty good, starting to turn on that PMO double bottom, but still, I don't know. It's a little bit iffy to me with this big gap that could cause resistance. We may not get the push back up into it, but the double bottom is looking encouraging. Computer services starting to round off on the bottom, but there's still, the PMO is still in decline. Declining trend on electrical components. Semiconductors inching their way higher. PMO buy signal, stochastics above 80. So this is a strong area in technology, and software also making a move. So if you're going to be in technology, computer hardware looks pretty good. Semiconductors and software. All right, so that covers our sector and industry groups. It's now time to get into more questions if we have them, or into our symbol requests. And Dad, I think today I'd love your help on the weekly charts. We'll talk, I'll have you comment on those as we go through our symbol requests.
Okay, we've got asking you shall receive 26 symbol requests at this point. I don't see any what questions that we need to address right away.
Okay.
Start with
Lots of
IJR.
symbols coming in. Woo, look at that. Okay. We have plenty to look at. So we're going to start with
IJR.
IJR. Okay. Let's actually go to the under the hood chart for this one, because we do have IJR with all of the under the hood indicators. So IJR hitting some important support right now on the daily chart. PMO is not quite turned up here for IJR. While we're going to see a little bit of a rally here in the market, I'm not looking at IJR as going to, I don't see the leadership coming from small caps. You can see relative strength is moving lower on IJR. So if you're going to be in an index fund, I don't like this one in particular. You can see that the participation is still trending lower. We're not getting the kind of we're not seeing the kind of under the hood indicators we need to. Everything is still looking in decline. So while I think you'll be okay with IJR over the next week, while we do see some rally, if it does, like we suspect it might do, I don't think that you're going to be, I don't think you're going to see the gains here in IJR that you're going to see in some of the larger capped indexes. But let's look at the weekly chart, Dad.
Right. On one of the weekend shows, they were saying that we should look for some activity, upside activity on small caps. Me, I don't see it. It's been, they were saying it's been an underperformer for years, and don't see any signs that it's going to. It's right now. It's the worst performing market index that we track. But you notice we have a period here like over almost 2 years of where it's flat, and it's not even trying to challenge the all-time high back in 2021.
Yep. All right. So there we go for the weekly. I've got to make sure I put the big weekly chart up. I keep going to my regular one. All right. Okay. And we'll skip the 5-minute for this one.
Okay. How about Lilly, LLY?
Okay. On the short side, it looks like. All right. Well, not a great short to be in right now, I'm afraid. This looks like a pretty solid rally too, with the PMO turning up right now. You've also got the stochastics rising, not quite above 80. But if you showed me this chart on the buy side, I'd have probably been, yeah, I think this might be good on the buy side. So 5-day EMA moving above the 20-day EMA. That's a short-term trend model buy signal. So everything's looking pretty bullish on this chart. Let's go ahead and look at the weekly. Oops, let me get to the big one.
Good.
Yeah, weekly looks pretty good. So yeah, I don't see this as a good short. Notice also that stock charts technical rank is at the very top of the hot zone, I call it, above 70. If you've got a stock charts technical rank above 70, then you've got that stock is doing better than 70% of its universe. And in this case, it would be a large cap universe. And so in the intermediate and long terms, Lilly is looking very strong according to the stock charts technical rank. So I would say this is more of something you'd want to look for on the buy side. If we go to a 5-minute candlestick chart, as far as entries and exits go, your exits should be where the PMO turns down, and your entries are when the PMO has a crossover combined with a positive RSI. So that's where your buy points go. Now you can be more aggressive on this chart if you want to wait and just go to when the PMO turns up. That's usually a pretty good buy point. Just know that it carries extra risk of some downside. So right now I'm looking at this. The PMO is in decline, but price is managing to stay pretty even. So I would say keep an eye on this, but I think this is going to be a pretty decent buy point for you right in here.
JPM.
Daily chart, kind of in a trading range right now, kind of unexciting to me. The PMO is flat. It is turned up. Stochastics are rising, but they're still below net neutral 50. We are seeing some pretty good outperformance of JP Morgan versus its industry group, and that has helped it outperform here. But right now it's kind of performing in line with the S&P, which, if we're getting ready to rally here, isn't going to be a terrible thing. But I know that there are stocks out there that are outperforming the S&P right now. So this is more of a sideways trading range. It's not something I'd be interested in right now. Let's look at the weekly chart.
Okay, rising trend. PMO, weekly PMO is top, so I'd wait for that to turn up before I would be interested in it. But it's got that long-term resistance back in 2021, so the all-time high, and so that's another concern.
Yeah. It hasn't made it up there the last couple times. This is a pretty strong support level, so I could see price moving higher from this level, but ultimately it's kind of a trading range stock that I'm not that interested in.
ALXO.
All right. This is a low-priced biotech, so going in, just know this is high risk, high volatility, clearly. Wow, let me get my inspect tool here. Talk about some volatility, though. My goodness. So let's see, from this. So when we rallied, that rallied up about 28% from this level to this level. So this is high volatility, high risk. I'm not really liking the way it's acting right now, with two filled black candlesticks, a bearish filled red candlestick. These are all not really the best looking candlesticks here. Makes me think that there is some tentativeness maybe on this breakout. I wouldn't want to be involved here for the reasons I stated just to start with. It's high volatility and not something that suits my risk appetite. I would just be really worried with the way these candlesticks are kind of gathering here in negative fashion. So I don't know that I'd be a buyer here. Weekly chart. I mean, the weekly chart looks good, but again, you're counting. You might have to deal with a 50% decline before you get a 70% rally. So I don't know, maybe a small position here, but ultimately I'm not a big fan.
BA.
All right. Don't like this one either. I think when you're trying to come in here and bottom fish, it's a little dangerous right now because the market, I think, overall is weak. We're just getting a nice little rally that's going to probably come in this week, but I'm not feeling so good about the market after that. I don't know that I'd be looking to bottom fish at this point. You've got the 50 and 200-day EMAs getting ready to have a death cross. You can see the relative strength is terrible here. I don't even know that I'd consider it a short just because it's already lost so much value already. I don't know how much further it's going to move down, but trying to catch this falling knife is dangerous.
This morning they had put up a list of defense industry stocks, and Boeing was on it. All of them were up like 3% except for Boeing, which was pretty much flat. So there's some problem there. And it was at 757. It's crashed. And I think that's still haunting them.
Yeah, could definitely be. So if you're going to be in aerospace, you can see right here, relative strength against the group just proves the point of what Carl was saying. All right, so let's move to our next one. I don't think we need to go much further on Boeing.
CRWD.
CrowdStrike. All right, this is in software. Like I said, this is going to be an area that should do well over the next week. And we're seeing a really nice move from CrowdStrike today on the breakout that happened last Friday. So we're getting really nice follow through on the breakout, which I like. You can see that it is outperforming the software group by quite a bit. So if you're going to go find a stock, this is probably a good one to be considering in that group. Let's look at the weekly.
Rising trend, everything looks good on that, except it's in the trend channel. It's really due to be pulled back somewhat. So I think you could probably find a better entry than right now.
Right. All right. But if you did want to enter, here's our 5-minute candle. I don't see an entry point right now. The PMO is in decline on the 5-minute candle. I think you need to wait around. You might get a nice little pullback and make an entry a little bit more, a little bit better for you.
Okay, let's try to move a little faster. We got it.
All right.
They're covering us up. CIBR.
All right. Double bottom, nice little breakout, silver cross of the 20 and 50. PMO rising, stochastics above 50. This looks like a good candidate to me. The cybersecurity ETF, I would expect, will do well over this week. And if we look at the weekly chart, it's kind of like a cup with handle, but this is a problem.
Yeah, and we do have a double top.
Yeah.
So
short term only.
Okay, TQQQ.
This is the Ultra Pro for the QQQ. I think that it's going to see some action this week. It might be a way to take advantage of this rally because it is juiced. PMO is about ready to give us a crossover buy signal. So this might be a way to take advantage of some of this short-term strength. But again, keep this very short-term. I don't know that we need to look at the weekly chart, but cup with handle. But then it's similar to the last one where we've got this topping PMO, and in this case, a sell signal. So again, keep this very, very short-term. It's an ultra, it's a juiced ETF. So you should keep those in the very, very short-term horizon anyway.
AI, buy, hold, or sell.
All right. This is software. You can see that it's underperforming its group. And you can tell that that's got to be the case because it's not doing much today. It's actually having a pretty bad day. I don't know that I'd be going into this looking for a good size rally. You might see some rally here, like I said, in the very short term, but this would not be something I would be looking at, mainly because it's really an underperformer against the S&P and against its group. So I have to give this one a thumbs down. I think it's a little early to short this one, but I think you could keep this on the radar for when the market does make the turn. This looks like a pretty good shorting candidate.
RIOT.
All right, Riot Platforms, another software. Again, I think you can find something better in this group. You can see that its relative strength is kind of in line with it, but trending lower. Software, as you can see, is starting to trend upward with relative strength. So we really do want to try and find something with better relative strength. We are getting a death cross coming in on this one, kind of a double bottom, but again, I think there are just better candidates than this one.
Okay, with next one, we've got 12 symbols of one entry. We'll just try one. We can't do 12, but try KO.
KO, Coke. So consumer staples have really been suffering, just really struggling. And Coke is a great example. I mean, if you looked at the XLP chart, it looks very, very similar. I would say that this is an area that I wouldn't be looking for a big rally this week. I think that the weakness that's underneath the market is going to be a problem here for consumer staples and Coke. I just don't see a reversal coming in on Coke. It is certainly very, very, very oversold. Let's look at a weekly just to see if we can find some support here. This is a pretty strong support level, but wow, look at that weekly PMO. It's vertically moving downward.
Try PEP to see if there's any similarity.
Yeah.
Somewhat, yeah, it's certainly in decline.
Yeah, not good. Looking a little better than Coke, though, but in general, I think I'd stay away from consumer staples.
Okay, FRO.
Filled black candlestick, which is a bearish one-day formation, means it opened higher. While it's trading higher than it was on Friday, it is below its open. PMO is surging above the signal line, so I do like that. I just don't like the filled black candle on the breakout, but it's just a one-day pattern. Outperformance going on here, so that all looks good. Let's look at the weekly. The weekly chart looks very healthy. So I'd say this
due for a pullback.
Definitely due for a pullback.
It's getting parabolic.
Yeah, that's a good point. You can see it comes right up here and just gets straighter and straighter there. So yeah, you are at danger of a pullback. So maybe you might want to keep this one in the short-term time frame. But like I said, that filled black candle is a little bit makes me nervous here. See, you can see the big pop in the morning, and now it's just sort of trickling down. I think you would get a better buy point. You could probably look to get it close to where it was near the open is what I'd be looking for.
SHIP.
All right. Also marine transportation. Yes, another marine transportation. This one looks a lot healthier. I really do like the rally here. It is a bit parabolic, that rally. So that does beg for a breakdown, but you can see we did get the breakout from this level. So I think there's still some follow through. You've got the golden cross of the 50 and 200. RSI is overbought. So again, it does need a pullback. Might offer a little better entry. But yeah, I like the look of this one. Let's look at a weekly. We'll need to make that log scale.
Yeah. Not much interest there.
No. I mean, we do see that the PMO is rising, but it's about halfway between its trading range. So your upside potential here, well, to get to that level is about an 16 to 18% gain. So I guess there is some upside potential here. And a 5-minute candle. PMO trying to top right now. But a pretty decent price pattern. It pulled back early and it's rallying. This is a filled black candle, so it looks like you might be able to get it at a little bit better price point on a buy, but not bad. I think this one has some upside potential.
BOX, thinking about selling it.
All right. Yeah, I can see why you would want to do that. And I think I need to go straight to a weekly chart because we do see that the PMO has topped beneath the signal line. So this one's due for more downside. So I think getting rid of it's probably a good idea. And yes, you are definitely vulnerable to more downside here. I could see this as a shorting candidate to bring it down to this level, which is about 6%. So I think that this is probably a good time to get rid of this. I think it is a shorting candidate, but I don't know that there's that much potential downside for it. If we go to the 5-minute chart, looks like this is your sell point right now. The PMO is topping. That's what I look for to get a sell point. It is starting to pull back from this rise that it had earlier today. So I think this is that point in time where you might be wanting to hit the button.
EDZ.
Emerging markets bear. ETF. Well, it's outperforming. It hit resistance and turned back down. This is a 3 times ETF, so I don't really want to comment too deeply on it. It's going to be high volatility. As a hedge, I think it probably would be a decent hedge looking at it right now, but PMO is surging above the signal line. I need a weekly. Yeah, there's some upside potential here, but we're hitting resistance right now. I would hesitate to get involved. I mean, the technicals look solid, so I can tell you that, but I just would hesitate to get involved in a 3-time bear right now when I know the market's looking kind of like it's going to rally over the next week.
Yeah, we didn't cover seasonality, but the 6-month seasonality is certainly due to start turning bullish as of November 1st, but it could easily do it in the middle of this month, which we are in now. And then, of course, it could not bottom until next month. But right now, it's looking bottomy.
Yeah. Well, we didn't look at our indicators this morning, but our Swenlin trading oscillators have been in a positive divergence with the market now for about a week. And so that does tell us that in the short term, this bottom looks pretty solid.
EANW.
And W.
Long.
All right. I think we may have gotten most of the upside on this one, but at the same time, I know this is one of those stocks you always want to try and get a hold of on a good pullback. It's a pretty solid performer. You can see back here how it's been outperforming quite some time here. I do like the rally. I like the breakout. I'm just wondering if it's kind of late. I think you're going to still get some more upside, like we looked at some of these others as well. So I like that. The weekly chart. Well, the weekly PMO is turning up for a second time, but last time it turned up, that was the signal to get out. So it is at all-time highs here. Like I said, I think you're going to get some more rally over the next week, but I just would have my time frame very short term.
MOD.
All right. Quickly on the 5-minute chart, no buy point. It looks like you're going to get a better buy point on Pan W. And what was the symbol?
MOD.
Modine Manufacturing Auto Parts. PMO turning up, so I do like that. It is at overhead resistance. Stochastic is above 80, looks pretty good. Outperformance for it. It's just near overhead resistance, which would have me a little nervous here. But it does look like a pretty good market bottom right now. And the weekly chart looks really overbought. PMO trying to turn down. I think you're going to get some upside out of this one. I just think it might be limited. The 5-minute candlestick chart, you're kind of at the buy point because the PMO's flattened out. It doesn't look, it is topping right now. But I don't know. I think you may be able to get it down here on a buy point just because this PMO is starting to look a little toppy. But ultimately, I don't know that you're going to get that much better of a buy point.
Bank of America, BAC.
And it looks like that's for a short.
Yes.
I can see the reverse flag. I can see the PMO in decline, and it's definitely underperforming the bank's group itself. It is oversold, though. Let's look at the weekly chart. I can see it as a short. I'm just wondering how shorts are going to fare this week. But this does look like a pretty good short. Notice it's dropped below this area of support. This is the next level of support down here, which gives you some potential downside of about 9 to 10% to the downside. PMO topped. I mean, it looks pretty darn ugly on the weekly chart. So I could see this one as a short. 5 minute, we're going to do it differently this time. Since we're getting into a short, we want to get it as low as we can get it. So at this point, the PMO is turning up. It looks like over here. So you're going to probably see higher prices coming in. And on a short, that will work in your favor because you want to get it as high as it possibly go and then watch for it to go down. So I think you're doing well. I think you could get a better price point on the entry for a short, though.
ZUMZ.
Zoomies for a short, I'm guessing. PMO moving lower. Everything on here looks pretty terrible for a short. I mean, it looks terrible, which is good for a short. I could definitely see this one as a shorting candidate. The weekly chart, I'm wondering if it looks as ugly as the daily. It is looking fairly ugly as it tops out here. Support is down this level, the 20. Oh, that's about a 20% decline before it hits strong support. I think this is a really good shorting candidate. I like it.
Okay, ARRY.
ARRY. Great. So this is renewable energy. I would be looking at this as a short. Definitely everything going south on the chart. Renewable energy doesn't look healthy. Next level of support down here is another 11% decline. I could definitely see this as a shorting candidate. Moving forward, weekly chart looks pretty ugly.
Well, it's a trading range, just near the bottom. So
the bottom of it.
You might look for a entry point for long on it when it gets.
Yeah, I think it's got more to go.
Yeah.
But yeah, looking pretty ugly. But these trading range stocks, as much as I don't like to trade trading range stocks, if you keep them on the watch list and you do see them get down to the bottom of their ranges, it's not a bad way to play.
Okay, a minute and a half. FDN.
FDN. We got through quite a few simples. Thank you for helping with that. Internet index fund. So I think this will be a good place to be over the next week. Again, technology comp services looking the strongest. There's a double bottom going on here. PMO is turned up. I think this looks like a pretty good candidate. Weekly chart, not looking too healthy, double top here. We're looking at this as a buy. So I would be keeping this in the short term because I don't like the way the weekly chart, the weekly PMO is acting. Even the weekly RSI is in decline right now. It still has a pretty good stock charts technical rank, which is why I'm like, yeah, I could see it in the short term. I'd just be very careful with it in the intermediate term.
10 seconds.
10 seconds. Well, I'm going to stop the share. I never even did my commercial, so I will send my commercial. Go to DecisionPoint.com, check out our services, our newsletters, and I think you'll be very happy with them. I saved you from the commercial, so go there now. All right. Good luck and good trading.